Inventory in some cases starts to creep up as buyers' demand starts to cool because of the high mortgage interest rates. But here in the Treasure Valley, one county goes this way while the other county goes that way. Let's go ahead and find out which counties did what and what happened in the real estate markets for the month of August of 2023. Well, hi there, everybody, and welcome back. Mike Petras here with MPRE Residential, powered by NextHome Treasure Valley, and welcome to another episode of Mikey's Monthly Market Updates for August of 2023. Now, if you are new to this channel, this is going to go ahead and review and see what happened in the Treasure Valley real estate market for this month. So if you are looking to buy, sell, or invest in real estate right here in the Treasure Valley, better known as the greater Boise, Idaho area, then this is definitely a video you're going to want to go ahead and stick around for. Not only will I be covering what happened in real estate right here in the Treasure Valley, but at the end, I'm also going to go ahead and discuss what are the best strategies if you are a buyer, seller, or investor right here. So stick tuned to that. But let's go ahead and let's jump into the data. Let's start off with Ada County like we normally do, and we'll see what happened. So looking at this graph, we can see that the median home sold price in Ada County actually took another dip this month. As we can see by this graph, in Ada County, we hit $520,000. So again, as mentioned, we did take another slide for this month. But overall, if we take a look at the stats, we can see that we were sitting at 487, 495 at the beginning of 2023, which actually brings us up 6.25% overall. So overall, the market has actually gone up in the median home sold price since the beginning of 2023. But if we're looking back at the 602,250 that we had when the market correction began late May, early June, we can see that we're down 13.65% from there. And then if we're looking all the way back from 2022, we did bridge that gap last month, but as we took that dip, we are actually down 3.7% overall. Looking at the 6-month breakdown, we can go ahead and see that curve very, very obvious. If we're looking back all the way from March of 2023, when we're at the 483, 450, working our way up basically to June to 542, 500 when we hit our peak, and then have started kind of ticking down a little bit. We can see that we hit the 540 last month, and now we're down $20,000. But is that going to continue to be the trend? Well, we're going to have to go ahead and take a look at inventory to figure that out. And looking at the inventory, it really kind of dictates that it could go that direction to where median home prices could start slipping. But will they? Well, we are coming into quarter four. Kids are already back to school. That is usually when things start slowing down in the real estate markets. So even though we are starting to see a climb in the inventory, I do expect this to start coming back down the other direction to more or less stabilize itself during the normal swings of real estate. But we'll just have to keep watching and seeing. But we also know that the buyer's demand has been starting to be hurt a bit. And why? Because of the high mortgage interest rates. And they hit record highs not that long ago. They are ticking their way back down, but it is something we're still going to have to monitor and monitor the data as it does come in. However, from this graph, we can definitely see that it is starting to widen the gap. So more or less, what I do anticipate is it will start to come back down during the quarter four swing, kind of more or less intermingle itself, and stabilization will continue. But again, we'll just have to watch the data. But are we going to have that massive swing that we saw all the way back when the market correction hit late May, early June, as we can see from the graph too as well, to where the inventory was just way up here and the buyer's demand really died down? I do not see that happening in Ada County or even Canyon. So where is the inventory really coming from when we're looking at total single-family homes? Is it coming from existing, or is it coming from new construction in Ada County? Well, if we're looking at the existing home inventory, we can see that we're sitting at 913 homes for sale, actively for sale, in the month of August of 2023, and only 448 of those actually sold. But if we're taking a look at that pending line, it's also showing that the buyer's demand is starting to tick the other direction. And again, why? Because of high mortgage interest rates. But again, I do anticipate that to start to curve as we are going into quarter four, quarter one, the holiday seasons that we've got. And you can actually kind of see it in that is starting to turn the corner a little bit. But the gap is still there. And could we actually start seeing median home sold price start to dip down maybe a little bit over this holiday season between quarter four and quarter one? We possibly could, but we'll just continue to have to watch the data. And even looking at new construction, we can see that that's going up too, sitting at 633 homes available for sale, with only 173 of them actually selling. But again, take a look at the pending line. The pending line has kind of leveled itself out, but over the months, we can see that it's been ticking down in new construction. And why? Again, because of high mortgage interest rates, and even the home prices out in Ada County are a lot more expensive than we're going to find in Canyon County. And as when we get to Canyon County, we're definitely going to see that shift to where Ada is going this direction and Canyon is going this direction. But if we're looking at the overall months of supply of inventory for total single-family homes, including existing homes and new construction, we're sitting at 2.48 months worth of inventory, which is actually up from last month. And then we're also looking at 2.03 months worth of inventory for existing homes, which is up from last month, and 3.65 months worth of inventory in new construction, which again is up from next month. So interesting things are definitely happening in Ada County. And why do I think that's the case? Because of higher home prices and, of course, the mortgage interest rates. So for the month of August of 2023, who was the biggest loser overall? Was it existing homes in the median home sold price, or was it new construction? So let's go ahead and take a look at what happened with existing homes. And we can see that we took a big shot down to 515 in the median home sold price from the 542,500 that we had the month prior. But if we're looking all the way back, though, at the low point that we hit in 2023, which is really kind of sitting around March of 2023, we are sitting at 475,000, which actually puts us up since that time 7.76% in existing home median home sold price. But we're looking from last month alone, we're down 5.06%. And if we're looking all the way back from the market correction, when we're sitting at 586,750, now to the 515, we're down 12.22%. And if we're looking at just from what we had at the beginning of 2022, we only took a $100 drop. So really, we're on par to what we were getting in 2022. And overall for the month of 2020, or for the year of 2023, existing home median home sold price is actually on the rise. Directing our attention now over to new construction, we can see that we're sitting at 532,871 in the median home sold price for August of 2023. And if we're looking at the 539,990 that we had the month prior, we're not down all that much. We're only down 1.31% since last month. But if we're looking at the low point that we hit, which is really the beginning of January of 2023, up until today, we are up 7.12% from that. Sorry that I didn't include that number in this graph, but I went back, took a look, made the difference, and let you know anyway. But since the market correction, and we know that new construction in Ada County didn't really feel the full effects of the market correction until some months later. But when it hit the 690 that it hit, all the way back, really kind of around, June-ish, July, August. We're still down 22.7% since then. And at the 588,945 that we had in the beginning of 2022, we're down 9.52% since then. So who's the biggest loser out of the two? Is it existing homes or new construction? Well, obviously it's existing homes in this month for August of 2023. Now, will that continue its deal? Considering that we got Q4, the holiday seasons, we got the real estate swing between Q4 and Q1 happening, or will it stabilize? My guess is still on the stabilization, but we'll have to continue to watch and monitor the data. But as we can see by some of these inventory graphs, we can see that we are going up. We are going up. It is visible there. The gap is starting to narrow between buyer's demand and the actual inventory. But you can kind of see that it's starting to maybe turn that corner to where we can see more or less of a stabilization trend. And another tall tale sign that things are actually slowing down for the seasons is definitely going to be the days on market. And looking at this graph, well, we've kind of stayed a little bit, on the even par. We had 33 days, 30 days, 31, 32. But if we're going back to 2019, going back to 2020, 2021, 2022, you can see that the days on market always increase during Q4, Q1 time. When the holidays come around the corner, nobody really wants to list, sell. Nobody really wants to go out there and buy either. They want to just go ahead and wait for things to happen until the next year, which is just the normal swings of real estate. But we can see here that we're starting to inch back that other direction. So expect the days on market to increase as we start going into this. And again, I would expect the inventory swings to start coming back down the other direction. But how do we know that mortgage interest rates have really started kind of affecting, again, the Boise real estate markets? Well, let's look at the cancels and expireds here. we can definitely see that the cancels shot way up as compared to the previous few months that we've been seeing. In fact, actually, with the cancels, we were starting to see kind of a downward trend. But now that the rates got back into the sevens and firmly into the sevens, almost mid sevens, even close to eights with some mortgage lenders out there, we could see that some probably buyers got kicked out of their contract because the mortgage interest rates just happened to push them. On top of that, too, with mortgage interest rates on the rise, we do know that listings and people that are selling or sellers right now are really selling their homes out of a necessity deal, because why lose that 3% mortgage interest rate or 4% mortgage interest rate, or sometimes even in the high twos that some people were getting, to go ahead and switch that up for 7.5? It's just not there. So, but I would say that the majority of this was probably the buyers that ended up kind of getting kicked out because the mortgage interest rates went on the way up the way that they did. So, as we can see overall from Ada County has definitely gone a different direction overall. We can see that the inventory was on the rise. We can see the buyer's demand was cooling. We know that the prices out in Ada County are more expensive than we're going to see out in Canyon. So Ada County definitely took one direction the other way. So let's go ahead and take a look at Canyon County, though, and let's see what happened there. And as we can see by this graph, Canyon County, quite the opposite. In fact, actually, we're sitting at $405,000 in the median home sold price in Canyon County. And look at that, just boom, flat line, almost stabilization as we're going through. It's really kind of ping pong, went up a bit, kind of more or less tipped itself out, which we'll see when we get to the 6-month overall breakdown. But if we're also looking back at the beginning of the year, January of 2023, when we're sitting at 395, 445, up to the 405 that we have today, we're actually up 2.35% overall in Canyon County in the median home sold price. But looking back still from the 476,500 that we had at the beginning of the market correction, which was late May, early June of 2022, we could see that we're down 15% since then. And looking at the 424,900 that we had at the beginning of 2022, we're down 4.68%. But again, stabilization trend, as we can see, and actually we've been ticking up overall for the year. And as we can see, the stabilization trend is totally here in Canyon County. If we're looking at the 6-month breakdown, we were at 395, 490 back in March of 2023 to 389, 990, then to 415 when we hit like our peak. Then we came down 10 grand at 405, 404, 990, and then up another whole whopping $10 than we had last month. So will Canyon County actually, because of the inventory, may have an issue like Ada County could have when it comes over to the median home sold price? Well, let's go ahead and take a look at the inventory, because again, we know that housing prices is set by supply and demand. And if we're taking a look at this, yeah, has inventory started to tick up a bit over 2023? Yes, it has, sitting at 824 homes for sale actively in Canyon County. But look at that pending line. We can see that the pending line is also shot up. And even if we're looking at the buyer's demand, the actual solds, which was 399 sold for August of 2023, we can see that the buyer's demand is still staying right there pretty much with the inventory and intermingling itself, which we've also been able to see back in 2019 when things were more stabilized and doing a normal upward tick instead of what we had during the pandemic when we hit all the way down to 6 days worth of inventory and just shot prices through the roof. And then prices come down during the market correction. But look at that. We're definitely stabilized more in terms of the actual inventory versus the demand out in Canyon County. And why? Because the home prices are cheaper than what you're going to find over in Ada County. So I think that's exactly what is making the difference in Canyon County as compared to what's going on in Ada. And out of the two, who's really kind of adding to the inventory out of total single-family homes? Is it existing or is it new construction? Well, let's go ahead and take a look at what happened with existing. We're sitting at 433 active homes for sale and 236 sold last month. So, but as we can see by that pending line, it's kind of staying relatively stable when it comes to existing homes. So the buyer's demand is still there. Now, is the inventory starting to tick up to that degree, to maybe a gap enough to continue a market correction? Again, as I said in Ada, I don't see that happening, especially with quarter 4 and quarter 1 right around the corner. And why? Because kids are back to school. Normally that's a seasonal swing in real estate to where things cool down overall. So I do anticipate the inventory level to start turning the corner. And actually last month I said, well, it kind of chalked down. Maybe it was starting a little bit early, but we can see, boom, it shot its way back up. So we'll have to continue to watch this. But is it going to be the gap that we saw all the way back during the market correction, that big swing between that dive in the buyer's demand and the actual just crazy swing up in inventory? I don't see that. And by these charts, it's not looking that direction out in Canyon County. And how about new construction in Canyon County? Well, we can definitely see by this that the pending line is definitely overshot that. Well, why though? Because it takes time to build a home. So there's probably a lot of people out in Canyon County that are still just actively pending because they're waiting for their house to be built. But either way, if we're looking at the solds, we can see that the solds kind of creep their way up a little bit at 163 units sold for this month. And of course, the inventory did too at 391 active homes available for sale. But again, quarter four, quarter one, keep beating the dead horse. I don't see the inventory getting to a point, especially as what we saw during the market correction, or to be able to continue a downward pressure on prices. And as we can see, overall from the total single family homes, we've basically kind of stabilized that out when it comes to the median home sold price in Canyon County. But either way, new construction here is still looking very, very healthy. And I don't see it in danger of creating such a gap again to where we start seeing market correction happen in new construction in Canyon. Looks like the builders definitely did their job by regulating their own inventory. So let's dive into it. Who was the biggest loser for August of 2023? Was it new construction or was it existing homes? So let's go ahead and see what happened with existing homes first. Of course, we can see that the median home sold price here is sitting at $397,000, down $2,000 from what we had last month. And that only just brings us down by looking at this since last month, only 0.5%. So not a very big hit at all. But if we're looking back to the 339 that we had at the beginning of January 2023 to the 397 that we've got, we're actually up 14.6% in existing homes in the median home sold price in Canyon County. That is a huge, huge jump. So we're definitely starting to narrow that gap to the 425 that we had when the market correction began late May, early June, down to the 397. We're actually only down 6.58% since that time. And if we're looking at the 390 that we had since the beginning of 2022, we're up 1.79% overall since then. And really why? Because again, existing homes and homes are just cheaper out in Canyon County. So we got more migration flocking that area than they are going out to Ada County. And in new construction, again, that upward trend is still kind of occurring here. I mean, especially if we're looking at last month when we're sitting at 409,990 to the 419,990, we're up that $10,000 that we had. So since last month, we're actually up 2.38% in the median home sold price in new construction in Canyon County. And overall, the trend, when we hit the lowest point at the 405,859, and I believe that's going to be around April of 2023. Since then, at the low, we're still up 3.36% overall since then. So this year, again, Ada County and even Canyon County, we see the upward trends in the median home sold price. But we do got to watch that inventory, but I don't anticipate it to grow to level again to where we're going to continue a market correction. But looking at the market correction when we're sitting at the 549 all the way back late May, early June to the 419,990, we're still down 23.4%, which is a whopper, okay, in terms of value drop. And if we're looking at the 465 that we had at the beginning of 2022 to today, we are down 9.67%. Okay, now I want to revert back though to inventory real quick, okay, especially here in Canyon County. And again, as I'm mentioning, I believe that the inventory is not really kind of shot its way completely crazy, you know, like is maybe going on in Ada County, but our overall inventories are actually down from what we had last month. So they're down, they've ticked down. So overall in the total single family homes, it's only sitting at 2.06 months worth of inventory. And existing homes is sitting at 1.83 months worth of inventory. And then for new construction is sitting at 2.39 months of inventory. So we can see here from Ada County to Canyon County, two whole different scenarios that are happening. Even though some of the trends are looking about the same, Canyon County seems to be holding on a lot better than what could possibly happen in Ada County. Now, this one for me overall is actually really kind of a shocker. And that's if we're going to take a look at the days on market in Canyon County for August of 2023, especially going into quarter four when things, kind of slow down, kids go back to school. We could see that the days on market shot down to 29 days. Wow. I mean, that's a huge reduction, compared to what we had. But again, I'm not really terribly surprised. And again, why? Because of the high mortgage interest rates and because of the higher home prices that you see over in Ada County, again, we're seeing that migration shift of buyers heading over to Canyon County to where it's a little bit cheaper and puts them in a better price bracket for where the mortgage interest rates are. But do I anticipate the days on market to continue to go down, especially during quarter four and quarter one? No, I don't. I expect them to go the other direction. And as you can see by the trends from 19 to 20 to 21 and 22, when we hit this time of year, yep, it goes the other direction. So we'll just have to continue to watch. But if I see that actually go down in September, I'm going to be like, wow, that's kind of impressive. But either way, we'll continue to watch and see what's going on with the days on market. But again, Canyon County is looking relatively healthy compared to Ada. But now, did mortgage interest rates and as high as they got have an effect on Canyon County too, as well as it did in Ada? Well, it certainly did. If we're taking a look at the cancels and expires, especially the cancels, bam, they shot back up. We are definitely on a downward trend, but once those rates got into about the 7.5s, even with some mortgage lenders up to the 8s, ouch, it really started shooting even some of the buyers available out of their contracts, most likely, in which really ramped up the cancels. And again, as I say, with sellers, it's really selling for necessity right now, because why are you going to go ahead and give up maybe your high 2 or your 3% or your 4% mortgage interest rate for a 7.5? You're just not going to do it. So you probably maybe even removed your listing from the active market. But either way, I would still anticipate that this really kind of landed in the buyer's laps more, because that extra percentage point that we just jumped up and getting into the 7s and mid 7s, even higher, really started affecting a lot of buyers. Now the mortgage interest rates are coming down because we did get some better data, coming in this week, but they're probably still going to stay in the low 7s to mid 7s for probably some time to come. We'll just have to continue to monitor the data, see how the Fed reacts to a lot of this stuff, and continue to watch. Now, normally during this time of the video, I start diving into some of the big elephants that are happening in real estate right now to be able to maybe hurt our real estate market right here in the greater Boise, Idaho area, better known as the Treasure Valley. Well, in this point, what I'm going to do is I'm going to start a whole new series, and I'm going to call it the YouTube Panic Channel Mythbusters. So stay tuned to those videos that will be coming up in this week, the following week, as we go along. And I'm really going to tackle those issues that a lot of people are saying, doom and gloom, doom and gloom, doom and gloom. Because not necessarily do we have the doom and gloom that they keep talking about. So we're going to go ahead and dive into that. Stay tuned to those videos. Please hit that subscribe button. Click on the notification bell so that you are in tune to those videos, because I really, really look forward to explaining this a little bit more in detail and how well really the markets are reacting to what is happening, even with high mortgage interest rates. So we'll get into that. But let's start diving into the best strategies now for buyers, sellers, investors, and renters alike who want to go ahead and invest in this market and get themselves into a home. Okay, buyers, let's go ahead and let's start off with you. Very, very interesting times, of course. And why? Because of the mortgage interest rates. They are absolutely killing. It hurts to know where they're at, and especially where home prices are too. But as we can see by these graphs and these trends, we can still see the upward movement in overall median home sold price. So right now it's kind of a double whammy for you. Not only are prices starting to tick on their way up, but also are the mortgage interest rates. So it is kind of a confusing time. And I still hear a lot of the buyers out there, people around me saying, oh, this market's going to go ahead and crash in massive fashion like it did back in 2008. Well, I challenge you, is there going to be another 2008? Honestly, I don't think so. And why? Because the subprime mortgages, they don't exist anymore. Now, there is talk that some of the banks are getting back to just giving, 20% down with no income verification, but that's against the law. I don't care who wants to slice that one direction or another, but the Dodd-Frank Act absolutely requires income verification when it comes to mortgage. Now, it all depends on who's going to turn a blind eye if the banks are actually going to go ahead and try this. But I would think, considering what happened back in 2008, that they'll probably put the Dodd-Frank Act into enforcement. But that is another question for another video, especially when we get to the YouTube panic channel Mythbusters that I'm going to go ahead and start out with. But buyers, I can see the hesitation that you probably have. Why? Because home prices are on the increase, and so are the mortgage interest rates. But the way that things are going, the way that anticipation is that we think, and a lot of economists out there think, that the Fed is actually going to start lowering the federal funds rate, which doesn't control mortgage interest rates directly, but has a ripple effect of the 10-year Treasury note, that they'll start lowering that sometime probably around Q2, Q3 of next year. And at that point, the mortgage interest rates are definitely going to get a lot easier than they are today. But if you're facing home prices on the rise and where the mortgage interest rates are now, you might want to go ahead and consider your actual purchase now and just biting the bullet of where the mortgage interest rates are until you can go ahead and refinance. Because it's not going to stay this way forever. It can't. Eventually, inflation is going to come down to the 2% level that the Fed wants, or it's going to cross under the 3% level, and they're going to start slowly nailing down the federal funds rate and start bringing it down the opposite direction, which is going to relieve the markets, and that will bring down the mortgage interest rates. But if you're sitting there on the fence and you're waiting for this huge crash to happen, that even when the recession hits, that we're going to have 10% unemployment and foreclosures are going to be huge like they were back in 2008, I wouldn't bank on that either. And why? Because right now, that is the biggest thing that the Fed cannot tackle. And even today with the non-farm payrolls, the jobs still went up. So it's the biggest thing that the Fed has to tackle. Can they overextend the federal funds rate to put us actually into the effects of the recession, which now I kind of think that they're going to go up another 25 basis points and make it a little bit more harder and more prevalent for that recession to come around the corner. But again, is it going to be a recession to where we're going to see that kind of unemployment? I don't think so, because there's just too many jobs out there for as many people that want to fill them. So I think employment would come back down to more of a normal level than we've been seeing over the past several years now. But either way, buyers, of course, the decision's up to you. If you would like to go ahead and discuss this a little bit further, please feel free to reach out to me. Be more than happy to answer any questions that you have and probably put some things at ease and really explain them in detail, show you the data so that you can make the best informed decision before you decide to make the move and the purchase. All right, sellers, your turn. And again, the same kind of pattern that I've been saying for months now, really since a lot of this has started to rear its ugly head. And especially when it comes down to the mortgage interest rates, why really would you want to sell right now? And that is the case for pretty much most homeowners in America. Why sell? Why give up that high 2, maybe 3, or even 4% interest rate and turn it around for a 7% interest rate? You're just not going to. And that's really what has been happening and been the theme, which has been keeping inventory at bay and actually resulting in our median home sold price being on the rise. Because again, supply and demand dictates the price of real estate. So either way, it ushered in the time of selling for necessity. And really, a lot of the people that are selling right now, I'm going to anticipate that it's because of necessity as to why they're doing what they're doing, instead of just the general public saying, you know what, I want to go ahead and make a move. Now, if you are thinking, well, I'm going to wait for rates to go ahead and get back down to the 3s or 4s again, well, you're probably waiting for that for a very, very long time, because what do we know? The Fed is not giving, they're not doing quantitative easing anymore like they did for the 10-year period, to where mortgage interest rates were in the 3s. That is just not happening. In fact, actually, the Fed is doing quite the opposite. They're doing quantitative selling, quantitative tightening. They're getting rid of their treasuries right now. They're dumping them back into the market. They don't want to hold on to another $8 trillion worth of treasuries. They want to get rid of their balance. So will rates ever come back down to that nice little cushy area that you have right now and that I have too? No, it's just probably not going to happen. I would anticipate by next year, about mid next year, we could probably see rates start dipping back down into the 5s again, around 5.5. I'd be really, really shocked if they went down to 4.5. But either way, we'll just have to continue to monitor and see what happens with the markets when the Fed stops being as restrictive with the federal funds rate as they are doing today. But sellers, if you are having to find yourself in that situation, have to sell for necessity, of course, properly, appropriately pricing your home in today's market is still key. And we can see that with the inventory on the rise in both Ada and Canyon counties, is that is a key. That's your competition. So you want to make sure that you properly, appropriately price your house. And if you're looking to sell your house in the quickest amount of time possible, for the most money possible, then feel free to reach out to me. Love to set up an appointment with you to where we go ahead and talk for about 30 minutes and discuss the best strategies in order to do that in today's market. All right, investors, it's your turn. Again, interesting times, considering where the mortgage interest rates are right now. And I'm sure there's probably some investors out there that are really hoping everything just comes tumbling down, crashing, we're totally done for, etc., like happened back during the Great Recession, especially around 2010, 2011 time, when the big old hedge funds started showing up like Blackstone, THR, all those, or is it BlackRock? I don't know, I can't remember. But either way, they're probably hoping that everything crashes out so they can go ahead and start buying up these properties again, turning them into rentals, etc. Because remember, the United States wants to be on path of a certain other country out there, which we all know. But either way, if you are looking for a secondary property, of course, the more money that you can throw down increases your capitalization rate overall, and it just gives you that better return than if you're just putting down 20%. And especially where mortgage interest rates are right now and where the home prices are, it may not necessarily be feasible, at this point to go and invest in a secondary home. We probably have to wait for the rates to start coming on down to better your capitalization rate if you're looking for a mortgage. But of course, if you are looking to come out here and buy in cash, we can see that the home prices are on the rise. And again, as I mentioned, when it came to the inventory, to the actual demand, is the demand ticking down a bit because of where the mortgage interest rates are? Sure it is. And is inventory going up a tick? Sure it is. But is it going up to the levels that we saw that created the market correction beforehand? It's not. Okay, and especially with Q4 and Q1 right around the corner, I anticipate the inventory levels to come on back down. But we'll have to continue to monitor and see what's going on. But of course, cash is king. And if you're coming out here, that is going to give you your best capitalization rate for the rental property that you're looking for. And if you are in the flip game, as I mentioned, there's not really a lot of inventory out there, and it has started switching over to a seller's market again. So a lot of these sellers are not willing just to go ahead and dump their property so that you can go ahead and make the ultimate profit. So you just have to get out there and look for those distressed properties to be able to go ahead and flip and make your living. But either way, it is an interesting time right now because of where mortgage interest rates are at. I do understand that, investors, so we'll just have to continue to watch and see how things respond. All right, and lastly, renters, it's your turn. And as I mention all the time, renters, you are paying 100% mortgage interest rate. And why? Because you're paying your landlord. They're the ones that are gaining the equity that has actually returned to this market over this year. So I know mortgage interest rates are on the high end, but go back to the buyer section, especially where I kind of start talking about how I anticipate mortgage interest rates and how a lot of the economists out there anticipate mortgage interest rates will start coming down by about Q2, Q3 of next year. And they'll probably come somewhere in the fives and stay there. And they're probably going to stay there for quite some time. And again, why? Because the Fed is selling off their balance sheet instead of buying the treasuries, quantitative easing, which kept the rates in the 3s and 4s for as long as it did. So if you're anticipating and waiting for the 3s and 4s to come back around, it's not going to happen. I do not anticipate that at all. So renters, though, if you want to get out there, you are looking for that home, you are in there. Again, you're going to marry the home, but you're only going to date the rate. And you've got a lot of realtors out there that say different because they're trying to panic you. But again, at the same time, I do anticipate these rates to come down. So you're probably just going to end up being like any other buyer and having to bite the bullet for the mortgage interest rates for the time being. But in the meantime, if you are thinking about it and you like to go ahead and set a foundation of being able to purchase a home coming up in the future, maybe when mortgage interest rates get better, I wouldn't anticipate home prices to keep coming crashing down by any means. I just don't see that in the cards. But if you'd like to talk to a really experienced, awesome loan officer out here in the Treasure Valley to set that foundation, please feel free to reach out to me. Would love to put you in touch with them so that you can get the home of your dreams. Well, thanks again, everybody, for taking the time out of your day to watch these normally incredibly long videos. I know that I did chop out the big elephant in the room, but please hit the subscribe button, hit the notification bell so that you can stay in tune with the new series I'm going to have coming up called YouTube Panic Channel Mythbusters. so that we can go ahead and tackle a lot of these things that the panic channels are just trying to feed to you, saying, oh, everything's going to be horrible, because not necessarily is it going to be that way at all. So please pay attention to that. And of course, if you are looking to buy, sell, or invest in real estate right here in the greater Boise, Idaho area, better known as the Treasure Valley, I'd really be honored to represent you. So please feel free to reach out to me at 208-715-7827, or you can start beginning shopping for homes today at MPRE.homes, www.mpre.homes. But either way, if you did like this content, please give me a thumbs up. Please feel free to share this with somebody that is thinking about moving to this area. Would love to be able to educate them about what's happening in the real estate markets right here. And I look forward to that day that we speak. Well, God bless. Until that day, I look forward to calling my neighbor. We'll talk then. Thank you so much. Bye-bye.